Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. We're going to go ahead and get things started here like we usually do by taking a look at the S&P 500. And, well, it looks as though we may have found the top for now with the S&P 500 at 40,545. $85. We have bounced off of that area and have begun to move towards the downside. And apparently my channel has now been broken. So we will have to see if that maintains through Monday or not, because as you can see here in the past, we have broken my channel before. Not that my drawing is, market law or anything like that, but it has been fairly consistent over the last few months, almost a full year. And it is a high time for a correction. I think a lot of people are looking for a correction, waiting for one, because all of these stocks are just so overpriced at this point. And guys, I think the thing to remember, this is necessary. This is something that needs to happen. If the markets just went up all the time, all you'd have to do is just buy and hold and do nothing else, because, well, it goes up all the time, right? No, it goes up and it goes down and sideways and, diagonally back patterned and things like that. It's one of those things. It's a healthy thing for the market. We need to have some time for it to go down so that we can get in for cheaper, guys. This is where the magic happens. All right, the old axiom, buy low, sell high. Well, to get things low, sometimes that means the market needs to turn over a little bit. So we'll see if this downward momentum continues on the market, or whether the 50 moving average will provide support come Monday. There was a little bit of hesitation there at the bottom, but overall, the last week or so, with this one green day here on Wednesday, where everybody's like, okay, well, I guess it's going to get bought up again. Then we had some indecision on Thursday, and then Friday we continued towards the downside. So we'll have to see if this downward momentum holds, or if we start to rebound again. Perhaps the 50 will provide support and we will be bought up from here, or if not, if we get more bad news on inflation or COVID numbers or things like that, we could definitely see more move to the downside. So these will be things we'll be keeping an eye on. Quite a bit of volume here on Friday, going into the weekend. So we'll have to keep an eye on things come Monday, but should be very interesting here over the next couple days. Let's go ahead and take a look at the breakdown of the S&P 500 here, all the different market sectors. Let me make sure that's on year to date. Okay, perfect. Looks like real estate is still the top dog, up 32.42% on the year. Financials and energies are hanging right around the 29 percentile mark. Tech is pushed over the S&P 500, has been over the S&P 500 for all of September, and is still outperforming, up currently 21.56%. The S&P 500 itself is still up almost 20% on the year, which is very impressive to say the least. It has been quite the run. Healthcare and utilities are somewhat, underperforming at this point. Healthcare is right there, pretty close to the S&P 500, right around 17.75% on the year, still in the positive. And utilities are also up 8% on the year, just underperforming the S&P 500 at this point. Let's go ahead and take a look here at the asset classes. So oil has found the bottom here around 61.61 and has rebounded very nice. It's just kind of trickling upwards for the most part after this big bounce that we capitalized on. If you were here with us for that, we were able to get in on this rebound here, but mostly just kind of slowly grinding towards the upside. We've got, up days and down days. And so we'll see how high this goes. We'll see if we come up here towards 74.25, where we rejected last time, and see if that will hold as resistance, or if we'll just kind of continue this trickle down. If the market continues to go down, we'll see if this does as well. Gold, after bouncing off of 1680 here, kind of did a similar thing to oil, kind of trickled towards the upside. Now this is kind of starting to come back down, and really hard rejection of the 200 simple moving average here. We stayed below the 50 for a little bit, pushed up a little, hit the 200, and down she went. We are sitting pretty right now here, right around 1750 for gold. 1765 has been a area of support and resistance in the past, and it's showing to be that again. So we'll have to see if gold continues to go down. Gold has been somewhat something that we have not really been paying too much attention to lately, because it doesn't seem to behave like a hedge against inflation anymore. It really just seems to trade with the market at this point, and that really doesn't help us all that much. So we've been avoiding gold and gold-based companies for quite some time, and that's the main reason why we've been doing that. Also, gold is considerably, in our eyes, overvalued at this point. Take a look at Bitcoin here. Let's get our tulip buds while we can. We had this huge run up earlier in 21 in April, but had a hard rejection here off of 62, 64,000, almost 65, and we've not made it back there since. We did have this nice push upwards where, and I talked about this last week, where support becomes resistance. We pushed back down below it, and we just could not get back up above this line. Had a hard rejection towards the end of last week. And Bitcoin really hasn't done much. This is mostly just consolidation here, a little push towards the upside, kind of bouncing off of this 45,000 area. But right now, Bitcoin trading right around $47,000 per coin. Not too much going on as the new cryptocurrency day has started here. Do remember, crypto is traded 24/7. We do not have any positions in crypto at this point. We do recommend, if it's something you like to do, take your profit when you can. Is really what our advice is for crypto folks at this point, because it's still the Wild West out here in crypto land, for sure. Now, I talked with Riz earlier this evening, and he didn't have anything specifically that he wanted to talk about, but there were a few companies that he got in on a quick little dip. Let me just go back here on Discord and find this real quick. So a couple of big name tickers that I want to bring your attention to. Now, please understand that I'm not advising you to take a position in any company. And these are things that Riz has taken a position in. And I just kind of want to talk about it a little bit. So Apple, of course, one of the most fundamentally sound companies on the S&P 500. Getting in on a discount on Apple is always a good thing. Guys, Apple is not going anywhere. Even with the release of the new iPhone, couldn't combat market conditions. And that's really kind of the thing here. It's like, no matter what your catalyst is, sometimes overall market conditions will dictate what direction the security goes, and that would be down. So, we hit the top here on Apple right around 157.37, and it has been kind of red since then. So these guys are just some things to keep an eye on. Again, Riz has taken a position in his own personal account, but that does not mean that I'm advising you to do the same. Johnson & Johnson, another huge name that you should be fairly familiar with. And if you like dividends, Johnson & Johnson always offers a very healthy dividend if you do hold that through the post-dividend date. So definitely something that you can bank on here if you decide to go ahead and take a position in Johnson & Johnson. Now, Johnson & Johnson has been hammered a bit harder here, pushing down to the 200, but gapping down on Friday and just really hanging right around that 200 simple moving average. Looks like we closed at 163.56, and the 200 was at 164.70. So technically below the 200 simple moving average right now, and I do harp on this moving average quite a bit. It has been statistically proven as relevant. And if you watch time and sales anytime when a stock approaches the 200 simple moving average, you will see a lot of orders firing off. It's because a lot of hedge funds and algorithms trade around and in that area. So it definitely is an area of support and resistance. Pushing through it is always a big thing, and Johnson & Johnson has done that. However, extremely solid financial company, fundamentally, and really a good investment. And I think one of the things that I want to talk about here as we see if the market decides to go ahead and correct a little bit, holding very strong fundamental companies is going to be where it's at. The last thing you want to be doing is holding some piece of stock, penny stock garbage that you should have never taken in the first place. And, in these type of conditions, those companies get hurt the hardest. Walmart, another one, the biggest brick and mortar store, in the United States currently. We had been trading this before, again, looking as support becomes resistance. Very interesting how these things do happen. And let me just extend that line a little bit. We came back up here, and then as the market started to curl over, Walmart is curling over as well. Again, nice little earnings were very nice. Dividend, not as good as Johnson & Johnson, but still reasonable, 55 cents per share. So again, holding fundamentally solid companies, definitely where it's at. AbbVie is a pharmaceutical company. I've actually worked with this company in the past back in my pharmaceutical days when I was a contractor. Very nice company. They've got a pretty decent pipeline from my understanding. Let's see that dividend, $1.30 a share. That does not suck. Definitely a very good, solid pharmaceutical company. Earnings looking to be pretty well in line for, well, it looks like well over the past year. So, definitely a company that's not going anywhere, doing very well for itself. Definitely something you can buy and hold if you so desire. Something that you could consider adding to your portfolio. Just two more to talk about. 3M company, obviously, of course, all of us are familiar with 3M, probably most of them familiar with Scotch tape. That is probably the most common thing that 3M is known for. I know that I used that a ton when I was growing up. 3M getting absolutely clobbered here by supply chain issues, in my opinion here. And I think that's something that we need to keep an eye on moving forward is shortages, things like that. Obviously, the chip shortage is affecting automakers quite a bit. We talked about that a little last week. And, getting raw materials has become increasingly difficult for a lot of these companies. And so as these companies do take a hit, it is an opportunity for us to get in. You guys have to understand these shortages are not going to last forever. Okay. And any type of correction that we can capitalize on is something that we should definitely be, keeping our eyes on. LMT, Lockheed Martin Defense Company, getting hammered about as bad as 3M, if not worse, well below the 200 simple moving average here. Now, this is obviously a higher dollar stock at $340 per share. Nice ex-dividend there, $260 per share. Can't beat that. And this again, guys, is really the benefit of taking these really solid fundamental companies. I'm telling you, Lockheed Martin is not going anywhere. They still have all of their military contracts, and they're going to be doing just fine. Looks like earnings have been a bit up and down for Lockheed Martin as of late, but not huge misses from what I'm seeing here. So, definitely earnings are looking just fine for the most part for Lockheed Martin. Quite a good earnings, actually, over $5 per share, which is spectacular. And again, great company. You could consider taking a position here, buying the dip. As Riz mentioned, he has taken very small starter positions in all of these companies. Again, I'm not necessarily advising you to do that. If you do so at your own risk. Again, we can't advise you to do that here on webinar. But guys, those were the big stocks that Riz decided to go ahead and take a position in this week. Wanted to touch base with all of you. I see we got a great crowd here tonight. I really appreciate everybody coming out. If you have any questions or tickers or anything you want to talk about, now is the time. So for everybody who is here live, go ahead and post your questions in the chat. Let's pull up the S&P 500 here real quick, and I will await your questions. Take two. Should I average down? Let's take a look at it. All right, so this is definitely a favorite of Riz's. He definitely likes this company. Earnings have typically been in line for the most part. So, fundamentally solid gaming company. They make really high quality stuff. I'll admit I don't follow Take-Two as far as their production pipeline is concerned and what they have coming out as of late. I can give you some technical analysis here and kind of look and see. So we've definitely got something going on around here. And looks like we got something going maybe in this area. Okay, yeah, so that seems to be what it's reacting to for the most part. Up there, and then we'll just put this one in. That should be enough. Okay, let's bring it back to where we are today. So obviously Take-Two has been just beaten down here, for lack of a better term, ever since about, looks like we hit the top at about February 8th, has been smashed pretty hard. Even though earnings have been very positive, they've beaten expectations. Looks like the last 4 quarters in a row, all green, but yet they keep getting sold off. So it's one of those things where these things happen. Maybe perhaps investors feel that it is overvalued at this point. I don't know your entry, Matthew. You don't need to post that in the chat. That's perfectly fine. It doesn't look like a terrible spot to average down. It definitely has bounced here off of this support level around 151. And the 150, 151 area is going to be pretty potent, as that is an even number, and it's also a multiple of 5, which people love. And these are more psychological support areas, but you definitely saw what happened when it hit 150. It bounced really hard back up. So it's not a terrible place to average down if you've been holding it for a while. If you got in maybe up here somewhere, or anywhere in this area, I don't hate it. I don't hate it as an average down location here. If we do continue to see the market rolling over, though, you might want to wait. That might be a good idea to hold off. But yeah, keep an eye on market conditions. But yeah, it doesn't look like a terrible spot to average down at. All right, Larice wants us to look at the trade desk. TTD, I have traded this one in the past, back in my day trading days, back when it was like, even cheaper than this. Yeah, back in this area here, this 2017, 2018 area, before it kind of went crazy. So TTD bouncing very nicely off the 90 moving average here, is below the 200 currently, so just keep an eye on that. I don't hate it for a long. It definitely seems to be recovering. It's in a nice, little uptrend here. Let me draw that for you. So definitely, a nice move there, and we can even kind of see some going here. Excuse me. So, definitely in a bit of a nice uptrend here. It's definitely moving towards the upside. This sell-off here will be interesting, but it seems to be bouncing very, very solidly, and it looks like it didn't make it below the previous bounce point, which you can see here, which is a very good sign. So we made a higher low, which definitely is indicative of the fact that it is moving towards the upside. So yeah, if you like this company, definitely could be an option for you to take it long here. Again, keep an eye on the market conditions. That is going to be the most important thing right now in this environment. And I'm going to keep saying that for the rest of the webinar, because it doesn't matter how good the technical setup is. If the market just starts dumping, this is going to dump too, and most everything will dump with it. So just keep an eye on that, and you should be fine. But from a technical standpoint, looks really nice here. Only point of concern is the 200 simple moving average here. You may find some resistance in that area. Should I hold MU shares for a swing? Well, simple answer, in my opinion, is yes. Incredibly solid chip company. Micron, a personal favorite of Elite, Riz Elite in general. I mean, look at all those earnings beats, just beautiful. Been a bit beaten down here lately, and this is primarily due to the chip shortage. I think that is going to be the biggest issue for companies like this, AMD, Intel, things like that, here in the near future. And so once those supply chain issues get resolved, then I think we should see a bit more of a push, for companies like these. But there is always a rotation in chip stocks like this. So this kind of drawdown is not overly, overly surprising, especially with the current conditions around the world. And that's kind of more of a macro thing to keep an eye on. But excuse me, I'm getting sniffly all of a sudden. Allergies picking up. But yeah, I mean, if you're in MU, I would not dump it for a loss, is basically what I'm getting at here. So I would not let this go, even if you're in the red. Guys, I got to tell you, part of swing trading is sometimes we don't nail the entry perfectly. And I'll tell you, most of the times we don't nail the entry perfectly. Talking is hard, especially online. So sometimes you're going to have to hold through some red. Sometimes you're going to have to hold through a lot of red. I have 2 positions that I've been holding for several months now that are just being a bit persnickety. And the beautiful part is I'm in, solid companies. I'm not concerned, about their long-term viability. They're not going anywhere. They're very, popular stocks in general. And so I have no problem holding through a drawdown like that. MU, a great company. You should have no problem holding your shares for MU at this point. Do you think the market is taking into account AbbVie losing Humira? Yeah, I mean, obviously, when a drug goes off patent, the stock is going to take a hit. That's just all there is to it. The investors know that they're going to lose sales because every generic drug manufacturer out there is going to be churning out their generic version of Humira. So yes, I definitely think that the market is taking into account that Humira went off patent. These are things that do happen. Sometimes they get priced in, sometimes they don't. So, it's one of those things that, yeah, I definitely think that it's happening. Let me pull Appy back up. Yeah, things going off patent like that are definitely painful for a company in general. And, I talked about this a bit in my webinar I did a few weeks ago, talking about big pharma and how they operate and why things are priced the way they are. And I gave you my suggestion as to how to fix that would be to give these companies longer patent durations. That would be kind of helpful for them and might help drive drug prices down. I'm not sure if that would work in practice, but on paper, to me, it makes sense. But yeah, every time a big pharma company loses one of their blockbusters, and Humira is definitely a blockbuster, it definitely hurts the stock price, and it'll hurt the investors know that. How are we feeling about the situation in China? Not positive. That's the gentle way to put it. Yeah, I mean, I have many feelings about them and many, thoughts and things that I can't share on webinar because that will get flagged by YouTube and we'll get the video taken down. So yeah, we'll just say not positive about my feelings of China at this point. Not, huge on getting into, Chinese stocks. I know that some people have been toying with getting in on Baba, obviously one of the biggest companies on the Chinese market. But, ongoing talks of regulations, about with these companies definitely does not help growth. So we're seeing that, we're seeing Baba getting absolutely smashed right now. And this looks like a double bottom, but that doesn't necessarily mean anything. They could easily just die from here. It is very extended, well past the moving averages, though technically not oversold on RSI currently. What would be some good options plays when there? I'll be honest with you, I'm not a huge fan of options, and you'll notice that we don't take too many naked options, meaning just straight calls and puts. It's okay, so what would be some good options plays when there's a market correction? Okay, I see your question now, Tom. Honestly, that's a tricky question to ask, and it's tricky to answer because no one knows when the market correction is going to be. I could be sitting here saying, oh, Tom, you got to take SPY puts and you got to take them, right now because the market's going to roll over, and then the market bounces, and you're like, what are you talking about, Chris? I just lost all my investment in those SPY puts. Well, nobody knows when it's going to bounce. The truth is no one knows when it's going to go. And so it's impossible for me to say, okay, you got to take this one. That being said, if we start getting a lot of volatility, short-term options and VIX are pretty volatile. It's a good way to lose money if that's your bag, something like that. You could also, let's just look at doing straight SPY puts. The SPY, of course, is the ETF for the S&P 500. Again, I'm not huge on options at all, especially calls and puts and things like that. If you haven't taken Riz's masterclass on options, I highly recommend that. I believe he offered you guys a coupon code to get it at a cheaper price, so definitely recommend you guys take that if you're into options. I'll just be straight with you. Options are not my bag. They never have been. I've not really liked the all or nothing mentality on them. To me, it seems like a coin flip. I watched Riz try and figure out, an options earning strategy, and it just wasn't effective. It's very difficult to predict these large moves. And, when you take something like a straight call or a put, you need big moves. And I mean, trust me, if I knew when the market was going to roll over and when we were going to have a correction, dude, I would be, putting all my money in SPY puts and, riding that one to the bank. But the thing is, no one knows. So, you see all these people posting these things on Instagram and things like that. Like, oh, yeah, look at these options plays that I took. What they're not showing you is the 20 other option plays that they took that all went to zero. Okay, no one posts their losses on social media. They only post their wins. Just remember that when thinking about options. Be very careful. I have a personal friend of mine who I have been trying to get into Elite for years, and he is as stubborn as a mule, and he won't do it. But I have seen him blow up 3 accounts playing options and going way too big. So if you do options, be very, very careful. Be completely at peace with the potential that you could lose everything that you put into that. If you are okay with that risk, then you can take the trade. If you're sitting there and you're going like, I don't know if my account can recover if I take this trade, then don't do it. I understand that it's so enticing because options have such a potential, mind note that I said potential, upside to them. They also have a great downside to them as well, which they go to 0. So again, I'm not going to recommend, it's like, hey, we gotta go all in on SPY puts or SPY calls or things like that. I know a lot of people make a lot of money doing that, but a lot of people lose a lot of money too. So just be very careful with that sort of thing. If you want more specific ideas on options, I would hit up Riz for that. That would be more of his bag, I would say. So. All right, Juan asks, during the current down market on the S&P, do you still do long calls on stocks that are going up, like you, for example? Again, typically we're not really doing a whole lot of options plays. This is obviously a recent IPO, just currently just a little bit over a year on the market so far. Looks like we IPO'd back in September of last year. So yeah. Literally tomorrow, a full 365 days. Was it the 18th? No, it was the 18th, excuse me. So yes, yesterday was its birthday. Happy birthday, Unity Software on the S&P 500. I'm not too familiar with companies like these. I think it's incredibly dangerous to take a call option when the market is going down. That's not to say that it can't work. It absolutely can work. If there are some tickers that are basically just going to give the finger to the S&P 500, like, F it, I'm going to do me, you do you, and they just go, right? That does happen. It's a big risk. And again, with options, you're putting, the contract price of that option up for grabs. So be careful with it. You won't typically see us doing that very frequently. I'm not saying that we won't, but it is, a difficult thing to say. Yeah, Planterra does its own thing. Yeah, Planetary is pushing up pretty nicely here. And there are actually a couple of tech stocks that are moving up. The one that I'm still holding currently that I think a lot of members in Elite is holding is Corsair. I've been holding this for quite some time. I'm still in the red on it. I need it to get over 32. So if any of you feel like buying RAM, mice, keyboards, let's see what else, computer cases, whatever else that they sell, please feel free to buy from Corsair Gaming. Fully endorsed by me. I have most of their stuff in my computer right now, and I don't get anything for that other than hoping that your purchase will push the stock price towards the north side. Of course, we all know that that's not going to happen, and I hope you all understand that I'm being sarcastic in this moment. But yeah, I mean, you have stocks like this who just like, oh, the market's going down. Well, I'm going up. Again, I wouldn't recommend, jumping in on calls on this. It's already extended well past the moving averages, getting close to overbought on RSI. Again, stocks can stay above overbought on RSI for quite some time. It can happen, but it's one of those things when you look at a security right now, this is not one that I would ever take long. So if that's the case, I would not want to take a call option on this. Now, that being said, if you went ahead and took a call option down here, like on Thursday, you're probably pretty happy, on Friday, depending on what your strike price would be. But, hindsight's 20/20 on that, and I would never take this security long. Just looking at it right now, this is way overextended. Does that mean that I wouldn't make money taking that play? No, not necessarily. It could definitely do just one of these. It'd be like, whee, up we go. And you could be like, well, Chris, you were wrong. You should have taken it. Yes, in hindsight. But when I'm looking at this picture right here in this moment, right, this is what I'm seeing. Okay. We've hit something up here. There is some definite selling pressure here around 137. It doesn't want to push through there. This is our third attempt getting there. We had one here, another one here, another one here, and it looks a little dicey in this area. We also have bounced here again, support and resistance being in the same location. We pushed up here before and rejected. This looks a little dicey. I would not take this long. If someone said to me, "Hey, you want to invest in this right now?" I'm like, "Nope, this is not a good entry." So just be careful with options in this market, especially when it's pretty whipsawy. We see a lot of whipsaw in the S&P 500 during the day over the last couple of weeks, and you can see that by, I'm going to zoom in here so it's a lot easier to notice it here with these tails, with the wicks here on the candles, a lot of intraday volatility. Obviously in general, hi girly, Athena has come to say hello to everybody. In general, obviously the market is moving towards the downsides, but there is a lot of intraday movement, up and down. We've seen a lot of whipsawing lately, and it's been pretty tricky. So yeah, I would be incredibly careful with options right now. The options chain's got to be kind of crazy. Again, it's not something that I watch all that much because it's really not my thing. I'm more of a securities guy because and listen, if you like options, you do you. For me, I don't like the short time frame on options for the most part, and the fact that you could just lose it. I would much rather just buy the security and hold it. If I believe in it, that's my thought process. But that's just me. Different investors like doing different things. Miguel wants to know about entries for GIS. Let's take a look. Obviously, I had been playing with GIS before. Let's take this line out because it's no longer relevant. Okay, let's see what we're looking at here. So, GIS kind of running into the moving averages here. It looks like earnings is coming up. So definitely the first entry point for GIS is going to be after earnings. Getting in pre-earnings is basically a coin flip. Riz has pretty well, demonstrated that, and definitely, has said as much, and I know he'll back me up on that. There's no way for us to know for certain how investors and people who have a lot more money that they can bring to bear than the average investor, like all of us here in Riz Elite, are going to view the earnings report and the guidance moving forward. So it's really hard to say on something like this as far as an entry is concerned. I want to see it post earnings. Looks like earnings are going to be on the 21st, so Tuesday. So you're not going to have to wait too long to see what it's going to do. Now, if it gaps up and it pushes, then it's too late. That being said, if it gaps down and it sells off, or it gaps down hard and then it pushes down and it rebounds off support somewhere, in this area here around 57. Let's see, we got more here. This is definitely relevant here down 54. Definitely areas that we see a lot of trading. This 54 area seems pretty hot. So if it pushes down towards that area and holds, that would be a wonderful entry on something like this. Right now, with only 2 days before earnings, I'm not taking it. That's a huge risk. Could be a great payoff, but you could be holding the bag for quite some time if you take it now. So I would wait a little bit. Dividend is not too bad, 51 cents per share. And it does come several days after earnings, as you'll note. So just keep an eye on that ex-dividend date if that's something that you want to try and capitalize on post earnings, and see if it gives you a nice entry for that. These would be my major levels that I'd be keeping an eye on. 57 and 54 seem very relevant for this stock. So again, the whole dollar marks, you'll notice a lot of buying and selling in that area, especially intraday. So definitely keep an eye on that. But that being said, GIS is currently in a downtrend. So just be aware of that. Understand that, excuse me, let me take a drink real quick. And just understand that when you're buying something in a downtrend, it does mean that you may be holding for some time. If you're okay with that, then there's no reason you can't take the trade. But I'm not going to advise taking this thing until after earnings. because I don't want you holding the bag now, especially if it goes down. And, we've been seeing a lot of things kind of moving towards the downside post earnings. It's like even here in June, barely made a move at all on earnings, and it came right back down, and they beat pretty well. A nice 7% beat. That's solid. I'll take that any day of the week. We go back to the S&P 500 here real quick. Riz, okay, Miguel asked another question. I want to cover the S&P 500 real fast. One of the things that Riz talked about, and we talked about last week, were the support levels on the S&P 500 that we are keeping an eye on. The next one is 4420. So just keep an eye on that. No, there's no reason to apologize, Miguel. I will get to your question. So just keep an eye on that area when we get there. It doesn't mean that it's going to bounce, but I suspect we will see a lot of action in that area. And then, of course, 4,400 is going to be huge. That flat, lots of zeros at the end. People like putting their stop orders there. So keep an eye on that. That will be important. All right, Kroger, I believe it's KR. There we go. All right, so Kroger, obviously suffering from supply chain issues, just about like any other food carrier out there. It looks like it's been beaten down pretty hard last week, and I mean hard. Okay, yeah, earnings haven't been released yet, or have they? Yeah, it looks like they were released on the 17th. That's interesting. I need to dig that up and see if that is accurate or not. But yeah, I mean, Kroger, one of the bigger food companies here in the Midwest for sure. I know that we shop at Kroger quite a bit. Had a very nice run up post COVID crash here in, where are we at? Yeah, so the COVID crash was here in March of 20. That's when it happened, and it's been on a very nice run. Really pushed up. This looks like a very nice correction, honestly. Was way overextended past the moving averages here, and we have corrected back down, even with earnings. It looks like earnings day was Friday. So not much movement there, but very nice hold here around the 90 moving average. So very solid. If it continues to curl up, obviously people are going to need groceries no matter what the state of the pandemic is. And Kroger is always going to have people walking through their doors to get their stuff. Again, another very solid company that you shouldn't be too concerned holding. Not too amazing on the dividend there, but it's better than a stick in the eye. I'll say that much. It looks like ex-dividend date is not for some time. I'm not sure if this is correct. Make sure you check on that before you take what TradingView says as gospel, because sometimes they do get these dates incorrect. So do keep an eye on that. But a very nice hold here on the moving average. I would not feel too bad taking a long position in Kroger, but it has been going up for quite some time. There may be more of a correction coming, especially if the market dips. So keep an eye on it. But this is a very promising move, to say the least. All right, Yas says, is SU on the TSX exchange? Thoughts? We discussed this last week. It pushed up since then. Okay, let's take a look. SU on TSX. Suncor Energy. All right, so solar, obviously with all the talk about climate change and things like that, solar is definitely something that could, make a move and things of that nature. I know that Riz talked about this more. He talked about it more extensively, so I definitely highly recommend you guys, if you want Riz's opinion on Suncor, go ahead and take a look at last week's webinar. That would be a good thing for you to check. So it looks like the 50 moving average here is providing quite a bit of resistance for Suncor at the moment. The 50 obviously trending down here over the last few month and a half or so, about the last 2 months, I'd say. And we came back up here and we tested it twice and we rejected. So I'm not ready to call this a recovery just yet because, I mean, we're still kind of looking towards the downside. We are really just consolidating, to be honest with you right now. It's really not moving hardly at all. It's just kind of stuck between here. Between those two lines is really where it's stuck at, and it's just trading in that channel right now. If it breaks through the channel and it confidently blows through the 200, I would feel a lot more comfortable taking it at that point. Right now, taking it here, you could be stuck in purgatory channel land for some time, and that's never fun. I remember that with a couple of stocks I've been in, Pinterest being one of them. That one has been stuck in the channel for about a month and a half as well, and it's not fun, guys. So wait for a definitive break here. I think if you do have a channel breach that's confirmed, then I think you could see a nice move towards the upside. But right now, I personally wouldn't take it, mostly because everything's kind of pointing down on this. All the moving averages are pointing down. The 200 is starting to flatten out and will start to curl over here shortly as this price action starts to get taken into account more. So, yeah, this is a tricky one to call. And again, with swing trades, guys, remember that we don't have to top tick and bottom tick these things, all right? So we are not trying to find the absolute bottom. We're not trying to find the absolute top and maximize all of that profit potential, because the truth is no one knows where they are. You know, it's one of those things that, you know, you can get lucky every once in a while and you'll hit it. Yeah, I'm on the TSX exchange right here. So we're on it, don't worry. It's a Canadian stock, it's a Canadian energy stock. But we do have a lot of members here from Canada, so it's not a problem. But yeah, guys, we want to capitalize on the meat of the move is really what I'm trying to say. So even if you just get a bite out of, you know, a larger move. So let's say, you know, let's say it does something like this, you know, here for a little while, and then it starts to go, you know, whatever catalyst this might be. You know, if you get in, like, say here, and you're like, okay, it's getting kind of wild, I'm going to take it out here. That's a lot of profit potential, guys. I would be pretty happy about that. I don't know about you, but I would be good with hitting that amount of profit on a swing trade like that. So, you know, it's not necessary to, you know, hold it all the way to the top and hit it all the way at the bottom. You could be like, oh, well, I should have gotten in here at 21.97. It would have been perfect. Yeah, it would have. But there's no way that you can know right now, looking at this chart, what the bottom's going to be. You know, if the TSX takes a dump like the S&P 500 and this thing rips down to 20, you're going to be kicking yourself for buying in at 24.67 when we don't have a defined break of the channel, and it's just trading in this range. Really, it's just range bound right now. And actually, these lines seem very statistically relevant, especially this one here around 25. That's going to be a big area. But you can see we hit it several times. There's a nice hit there, right here, right here, right here. So yeah, that seems to be very important. So keep an eye on that 25. Strong push through 25 should be indicative of, you know, a move and a breakout of the channel. So that will be your indicator, Yas, if you were asking me. I would not buy in right now personally, but that's just my opinion. 21-cent dividend doesn't suck. Not a huge amount, but for a $24 stock, that's pretty decent. So yeah, keep an eye on it. I would say if you want to wait for confirmation, you can. If you want to speculate on it now, you can. If it sells off some more and you start coming back down here towards this 22 area and you want to speculate, you could take a small starter position and see where it goes. And yeah, just don't go all in, as always. Good man, yes, you're doing just fine. I have confidence in your ability. But yeah, that's kind of my opinion. Just looks like it's range bound right now, and without a break towards either direction, it's hard to say for sure. But that's awesome. So great questions tonight, guys. Thank you, everybody, for coming out. I really appreciate it. Again, thank you, everybody, for being flexible on the webinar date. As always, I appreciate it. We all have lives. I want to be cognizant of that, of course, and we do our best to not move webinar. So we will be back at our normal time next week on Saturday at 8 p.m. Eastern, 5 p.m. Pacific. I hope that if you are in Elite, you will make it out. We had an amazing group tonight. Really thank you, everybody, for coming out. Really appreciate all of your great questions and comments. It's always fun interacting with you. If you're not part of Elite and you're catching this replay on YouTube, Riz has closed down membership. So yeah, you had your chance. We warned you when it was coming. We have a lot of great new members. We're really excited to have everybody. It's a wonderful community. So make sure that you keep an eye on Riz's website. The link will be down in the description box to get notified when we do have another opening for membership here in Riz Elite. And you could be part of this amazing trading community and help you grow your account and help you achieve financial independence. So I hope everyone has a wonderful rest of the weekend. Although it be only a few hours left, we will, of course, be ready to go at the bell and before the bell on Monday. So guys, have a great rest of your weekend, and we will see you in Discord tomorrow. Good night, everybody.